Income potential from the energy sector for higher yields. We have found a fund that has a potential 24% annual return from dividends, also has some additional growth, so there's no NAV erosion, and we're going to explain it all to you today. Hey guys, it's Doug the Retirement Guy with all your monthly ETFs, and that's right. We have one of the best energy sector SPDR funds available. When I started doing some research, analyzing, came up with a 24% potential annual return. We'll break down each and every one of it, see if it fits well for a retirement program or if it's just a good investment across the board. Let's get into today's video. We do have to do the disclaimer, and that is past performances don't guarantee your future results, and this information in this video is for educational and informational purposes only. I am not a licensed financial advisor. I am just one who's been studying this stuff for years. The example and suggestions discussed here are basically not suitable for all individual situations, so always contact a financial advisor before making financial decisions. Now, the fund we're talking about is the State Street Energy Select Sector SPDR Premium Income ETF. And yes, that is a complete mouthful. Let's just call it XLEI. So State Street came up with these SPDR programs about, middle of last year. And they basically broke down each sector. And energy on this one is what they've done. They've used their own, their SPDR sector fund for energy, XLE, is what they're using to trade off of. And what they're looking to do is selling short-dated call options on that particular fund. So these are all actively managed ETFs, and they call them fund of funds that provides that U.S. energy sector exposure from those investment shares of their SPDR XLE. Now, the yields have come out from the time of posting of this. Their current fund yield is about 24.76%. Well, as I've always said, that got my attention, and it probably gets your attention. But we are not ones who always fall for the yield gain and that yield number. We want to look at the total performance of the fund. So when we take a look at the fund, it is an S&P 500 indexed benchmark. It came out July 29th of 2025. Beautiful expense ratio of only 0.35%. We see a lot of these funds in that higher 6.5 to 7.5 percentage rate in a lot of different areas. And it does still pay that monthly distribution frequency. So let's break this thing down a little bit more. When we take a look at the fund's core, the assets under management, which is very, very impressive at $26 million. When we take a look at this from July of 2025 to today, over $26 million, a lot of cash that they've developed into this fund. As we talked about, the expense ratio, 0.35. Number of shares, just shy of 1 million shares, 960,000 shares outstanding. Now, their distributions, remember, this is based off of actual hardcore numbers, not over what's projected for the 12 months. And so far, they're at 14.20%. So it looks like they're on track to hit their forecasted number. So I'm not disappointed with that one in any way. We talked about it, says it comes out monthly. Now look at the price range on this one. $23.66 is the low, $29.50 is the high, and we're bouncing right in that $25.80 to $26.45 price range. Now that $29.50, raised up earlier in this year. And so now we're kind of looking at this as a nice recovery from January all the way where it's at today. So far year to date, so that's from January of 2026 to right now, April 15th of 2026, 8.23% year to date growth. So very strong growth potential with the potential of a strong dividend yield. So let's take a look at the breakdown of what's in this. Now, of course, everything that the fund works off of is all from the XLE SPDR ETF. So this is what we have on the board here. So you got to look at the underlying asset. What is it actually they're dealing with? Well, 99.78% of their allocations is all into energy. This is what I kind of like about these things. At one hand, is that you're just picking out a particular sector and you're going what I call all in. Now, you're not putting your entire portfolio into it. What you're doing is you're taking whatever your initial investment that you want to make is going all into energy. So think of it this way. You're buying ExxonMobil. 22% of their fund is ExxonMobil. 17% Chevron. 7% ConocoPhillips. So you can see that they're heavily rated in the top 3 funds. And then they equally balance out as we slowly roll down this top 15. And you can see a bunch of big names out there. And some of the companies that you probably don't even know or heard of that are out there, but they're all very strong energy companies. We take a look at the dividends that we've seen. Again, we've had the spike in January and retaliated back in February, but across the board, we got a fairly smooth consistency. Is, right now 54 cents in April, 45 cents in March, 24 cents, just a share under 25 cents for February. December, you go back to, and that's actually January because of the New Year's Eve, New Year's Day situation being closed. 73 cents December, 28 cents, 39 cents. So it's almost a nice little pattern that averages out to be right around that 40, about that 40 cent mark. So with some nice peaks here and there, but overall a nice 40 cent distribution. We look at now what we always like to talk about, total returns. When you take in total returns, which is your distributions plus your growth, you will see since inception, this fund is at 30.02%. So that's almost getting close to a year. We got basically about 3 more months, 1 quarter for it to attain its actual final number. Year to date, 13.38. Now that one's only basically 4 months old. And over the past month, which I'm not shocked at, down 1.60%. That ties into what's all going on in the global political side of the arena. So let's take a look at those total year-to-dates. So year-to-date total return, 13.38%. You can see the fund was growing, and moving right up the mountain until we just recently just had that slight drop off. That's all driven by the geopolitical side of it. We take a look at the total 1-year package. Again, another smooth running fund that they're doing the job that needs to be done. They're giving you some good some return in income plus additional growth. That's given it its nice 21.06% over the past, basically, I call it 12 months. Even though I know we're not into the whole complete, we're 3 months short, but that's how you rate these things all the way through at 21.06. Steady flow until we get into the April market, and then we have the slight drop off, all because of, again, political. So is this good for a retirement account? Well, if you understand and watch any of my channel, you'll know that we have basically have always done a 3-bucket system. There is the foundation fund, there is a growth fund, and there's an income fund. And I actually put this fund, you can go either side of this one, income/growth. And the reason why I say that is, first off, if we're looking at that yield that we're expecting to achieve here, 24.76%. That would definitely fit well into a income status program. Now, with an 8.23% growth already this year to date, you could easily put this fund into the growth sector and take that 24% yield, split it in half, and have basically your yield dripping half of your fund back into growth and the other half going to your income. That's what's nice when you have funds like this that have big numbers on both sides. But remember, don't ever let that yields, get you excited or, make you hesitant in a fund. You want to look at those total return numbers. So we're looking at this and saying a year to date, we're already up 13.38%. And you're seeing it's coming from both yield and growth. And over past 12 months, which is realistically at 9 months for this fund, at 21.06%. So those are hardcore true numbers, not forecasted yields. And so that's we can really take a look at where are we establishing with this. So in the 9 months that we've had 21% in the first 4 months, so basically 13% in the first quarter. This is just a fund, like I'm telling you. You can go either way with it, income or growth. Personally, I'd probably put this in my income side of it, just because of energy. I don't have anything in my classifications for energy, but this is a unique piece. So is it good for retirement? Personally, my opinion, that's all this is. Yes, it is. So State Street Energy Select Sector, the ticker XLEI, excuse me. What's your thoughts? What do you think of the fund? What do you think across the board? Do you give it 2 thumbs up? Give me a comment down below. I'd love to hear what your thoughts are of this energy find. Is it a good find? Did you know about it? Do you own it? I'd love to hear people who actually own it. Let me know. I appreciate it.
Thank you for watching. Press the